Welcome to We Help You Home, the podcast where we explore real stories, expert advice, and practical tips to help seniors thrive at home. Whether you're a caregiver, a family member, or simply planning ahead for your own future, we're here to help guide you through the journey of aging in place with dignity, safety, and the support that you need. I'm your host, Rob Steinbrook, and I'm so glad that you've joined us today. Today, we're joined by someone who has dedicated his career to guiding seniors and their families through some of life's most important financial and healthcare decisions. Rick Carter is a CLU, CHFC, and mediator, and he's well known in our community for helping Texans navigate Medicare, insurance, and long-term care planning with integrity and compassion. Rick, welcome to the show.
Great. Thank you, Rob.
Before we get started and really dive into Medicare and financial strategies and all that jazz, I'd love for our listeners to just get to know you a little bit. Can you share a little about your background and what led you into this work?
Okay, great. Thank you, Rob. First off, I am a senior too. Okay, so my little tag is Ask Rick, he's a senior too. Okay, because there are a lot of questions about what we're going to be covering. A little about me let me define those acronyms first. Those tag names. They're financial services industry designations. So I do have a degree. I went to school in San Marcos. It's Texas State University now. Had a different name when I was there.
Okay.
Okay. So I got a bachelor's in finance there. Well, that wasn't enough for me. As I started progressing into this career, I wanted more of an advanced education. So I acquired the CLU, which is the Chartered Life Underwriter. That is the original financial designation. At that time, I was working at USAA, and they helped provide some assistance. So I was able to set the record. I set the record from 1910 till about 1987 on acquiring that designation. The next designation, CHFC, stands for Chartered Financial Consultant. Now, the terminology of chartered means that an organization, like in this case, a higher institution, is granting this designation. It is not something approved through the state or the federal government. The last thing I acquired was a mediator designation. Now, that is something through House Bill Section 154 in the state of Texas. It is a 2-week course. It's quite fascinating. You do not have to be an attorney to be a mediator. In fact, some of your best mediators actually come out of the military or other areas not related to law. In my case, financial services. That training and that designation has helped me immensely in being able to help families settle what might be a basic financial dispute or acquiring assets. It could be through a divorce situation or money that was just left out there that we needed to track down.
Oh wow! So that's an asset that helps with your main roles, isn't it?
Yes, it does. And Rob, I have been heavily involved in the community for many years. I have just a servant's heart. As a young child, I actually helped another great friend who was born with cerebral palsy. Other kids and teenagers, they couldn't really relate to him. They didn't have the patience for him. I developed a skill set of understanding him, and we're still good friends. And after many years, so having that understanding of a special need really led me into the business and my service to the community as well.
I see. So helping people's just kind of been ingrained in you since
Right.
early on. Then,
Right.
Yeah.
Well, while we're on that, I'm going to tell you a little quick story about because we're talking about the heat now.
Oh, yeah.
Hey, when Texas gets hit by a winter storm, it really gets hit. Well, back around, I want to say it was around 2010. Right around then, I was going to a Rotary Club. I was living in Fredericksburg, Texas. I went to the Fredericksburg Rotary Club. Well, the Salvation Army needed our help. They said, "Who is willing to sign up to ring the bell? We're going to put you at the busiest intersection just before Thanksgiving or the day after Thanksgiving,
Okay.
actually, which would have been that Friday, that Black Friday, right there at Adams and 290. If you know Fredericksburg, that's ground zero right there. I'm down there. The temperature dropped into the 20s, and I was not dressed prepared for that.
Oh.
I'm out there ringing this bell. People, sometimes they give you money just to shut the bell up, but we're
Yeah.
like, I'm dealing with this cold. A verse came to mind, to get me through this little trial. And it was out of the Old Testament, Psalms 102. Serve the Lord with gladness, come upon him singing with praise. Well, I took that further to develop a Facebook group called Special Needs Advocates, providing emotional support for families with, autism and other types of special needs. Now we have 1,700 families, mostly in Texas, that we serve, really providing more of that emotional support
Oh,
area. So, yeah.
so it's your hand is in everything with
Right.
a little
But I
bit.
had to learn how to use Facebook. I had to learn how to build that and keep it active. And one of the first things I did was, I found a special needs mom who could help support the other moms and dads and families. And so she was very instrumental. And so that was my co-administrator. So it was another great way to build that group on Facebook
Oh,
and
wow.
be able to reach out to more families.
Well, wow. So you have a whole wealth of experience there.
Right,
Yeah.
right. And that's on the service side. At this time, I have been very privileged to be elected into a position, a leadership position here in Central Texas and really throughout Texas, with the largest senior care nonprofit council called Alamo Area Home Care Council. I am this year's president, and it is a tremendous pleasure. It's a lot of work, Rob. I'll tell you, trying to to lead everybody. But as you know, we consist of a number of the home care agencies, hospice agencies. It could be a senior care community, independent. I happen to be the insurance agent.
Oh, yeah.
Mhm.
Yeah, and
Uh,
that's actually how you and I met. Was we were at an event where you were representing your company and talking about Alamo, I believe.
That's right, Alamo Area Home Care
Yeah, and
Council.
I
That
was there with our hospice and home health care company. Yeah.
Right. It was during Fiesta. Yeah, I was
Yeah.
making the rounds. It was quite a time during Fiesta around here.
Yeah.
Quite an experience. But I'm so glad to meet you and want to support you in anything your organization is doing in providing that care to our seniors.
Well, thank you. So let's jump into some of the Medicare and supplement stuff here, and we'll
Mhm.
talk a little bit about that. It can be overwhelming for a lot of people when they come to the point to where they come up for Medicare, and they have to choose: are they going to sign up for regular Medicare? Are they going to take an Advantage plan, and all the hoops and decisions they have to make, and it can really confuse a lot of people. And so sometimes people get bad advice too. And I always feel sorry for those that seek advice, try their best, and end up with somebody that really kind of took advantage of them. So I think that finding the right person to help guide those decisions is just as important as whatever decision you make.
That is so true, Rob. And speaking of that, I actually was at a training earlier today, and there was another mature agent. He was
Hmm.
about 3 or 4 years older than me, and we were both talking how valuable it is our personal experience with Medicare to be able to share that with that Medicare beneficiary and helping them and decide because it really is an individual decision. Just because somebody's brother-in-law or their neighbor or even their physician says go a certain way, we really need to take a step back and let's look at our objectives. We probably understand our health often more than our physician or other families know. So it usually is a good idea to involve another family member because they may be directly impacted by the decision or possibly a poor decision associated with their Medicare choices.
Yeah. And I had actually somebody in my own family that they were making some decisions in that area, and they were saying to me, they said, "Well, this works good for your uncle, so it'll probably work good for us." And I'm thinking, well, just because something works good for my uncle doesn't mean it's right for you, because your situation's different, and everybody has a little different situation.
That's right. That's right. The uncle may have access to other resources, their finances. They more than likely they have a completely different health issue.
Hmm.
And that health issue is usually the driving factor. Health and finances often. So first off, Medicare Part A is designed to cover the hospital, hospice, anything associated within the hospital except for what we call Part B drugs. It's really a non prescription drug that's administered by a physician or by a provider or in the hospital. Okay, so that would be covered by Part B. But Part A is designed to be the hospital type plan. And it's something oftentimes, Rob, believe it or not, it is at no cost to the Medicare beneficiary. The reason why is they'd worked in the United States for more than 10 years, and they're eligible to have that feature of their medical plan at no cost.
And then so you got these other letters that come along. For me,
Right.
I mean, we got
Right. Uh-huh.
A, B, C, D, E, F, G. I don't know, H, I don't know what all we got. So what's the other letters?
And we want to distinguish the difference in a part versus a plan.
Okay.
So Part A is Medicare. Part B is Medicare. The Part B is the medical component of your Medicare. In other words, that covers your primary care physician. That covers your specialist. That covers, such things as it could be some type of an infusion, or I mentioned the Part B prescriptions they're actually non-prescription, and that could be chemotherapy or radiation as well. Okay, might be a knee injection. You hear about people getting knee injections?
Well, yeah.
That is a Part B, and so therefore there is some financial responsibility that the Medicare beneficiary has for that. Okay.
Okay.
One of those is a premium. The premium for most people for the year 2025 is $185 a month. Rob, that's gone up 85% since I started offering Medicare about 15 years ago.
Wow.
Yeah, it's gone up 85%. So have things gone up, and now this is directly affecting the Social Security because it's usually taken out of Social Security.
Right.
So yes, we've gotten increases there, but I've seen it where the increase in the Part B exceeds what the annual increase for cost of living is.
Yeah, I hear a lot of people in the senior population talk about how they get a cost of living raise, but then the insurance takes more than the cost of living raise was.
That's right.
that
So
were
they end up
granted.
with a smaller check, right?
Right.
Now, there are at least three ways to be able to get that cost defrayed.
Okay.
First off, there are different types of penalties that can apply. For one, if a person does not apply for their Part B or Part D as in drugs, prescriptions, then they can be imposed a penalty at a later time. So they really want to try to avoid that and get a clear understanding if that does impact them. A trained agent such as myself, we are required to take annual certification, both with something approved by CMS, who they administer Medicare, as well as with the individual insurance companies that we represent. And so that training leads us into helping the Medicare beneficiary understanding the consequences of a non-decision as well. Okay.
I see.
Right,
Yeah, so
so-
no decision can cost you money.
That's right.
even.
So where Part A is either automatic or requested by the Medicare beneficiary, which is really a new thing, what I'm seeing, where they need to request it. It used to be automatic. So unless you're taking Social Security, it's generally not going to be automatic. And then Part B, in some cases, you actually have to decline that if you do not want that. Why would somebody decline Part B? Well, maybe they have another resource. Maybe they're, served in the military and they really had just used the VA. Okay. Which Part B is still of great value to them, but or perhaps they work for a big employer that has group coverage. They're still working. Or maybe they're a retiree from the federal government or some other large employer that's now providing them retiree insurance, and they prefer to stay under that platform. Now, Rob, when I talk about what that platform, as you know, for under age 65, usually a Medicare plan has a premium. The premium often is related to the age and how many people are covered. Oftentimes, it does not necessarily recognize medical challenges that the insured person has or their family members. So everybody's getting the same rate within that certain class, but it can be quite expensive because usually there's deductibles, there's copays,
Yeah.
and there's another monster out there. I'm going to give you another acronym. You ready for it?
Yeah.
MOOP.
MOOP.
MOOP
Okay.
stands for maximum out of pocket.
Okay. Yeah.
So, my first test question today is if a person is on traditional Medicare A and B, what is their MOOP? The answer is it's unlimited. If they had $1 million in medical expenses, they could be out a couple $100,000. That's why we have supplements, or why people consider another type of plan called Medicare Advantage. It's often very much misunderstood. I have something of great use for your listeners who are seniors or they're approaching seniors. When you get that phone call, I want them to ask that caller one question: did I give you permission to call? Now, usually, Rob, you get a what? A click. I had one customer. He's a veteran from Vietnam. He was a radio operator. So he asked that question while we were sitting there on the interview. He asked, "Did I invite you to call me?" And of course, oh well, you did. Actually, this is a radio operator skilled in probably different languages and different types of communication.
Sure.
Even if it could be the enemy on the other side there.
Right, yeah.
And so he wasn't going to cut through this guy. That call ended abruptly. But please, I want to ask people, do not allow that caller to take advantage of your, they're going to make you some kind of a promise. Maybe it's in the
Yeah.
form of high grocery benefits. That's the most common one. Or it could be some other kind of a cash benefit. I want to urge people, work with an individual agent, build that relationship. I'm 67 now. Rob, I don't plan on ever retiring. My customers know who I am. They know how to reach me. They can reach me on the weekend or the evening. They're my customers for life, either their life or mine. We're gonna, we're gonna stick together through
Okay.
this. We're gonna tread through this, and we understand the challenges. Every time we turn on something on the TV, here's something new. Oh, you better call tonight, or you're going to miss out on a certain benefit that they're promising. A lot of times there's a bait and switch associated with that. So you really want to make sure that it's a good, sound decision that applies to the individual. Okay. So to make it through the alphabet soup is what we call it. Okay. So we know A was hospital. That's part of Medicare. B is your medical component. That's what traditional Medicare is, A and B. Okay. So that is one choice a person can make for their medical coverage. Now, when they do that, it is incumbent upon most everyone to acquire a Part D. A Part D is through an insurance company. There's many, many insurance companies that offer these. They've come under a lot of changes because of what's happened, in the pharmaceutical industry, as well as the overall expenses. What's behind that expenses? The head of Big Pharma might tell us it's all the research they had to do, or all the trial and error, or you're paying for all the past XYZ, where the true cost of that prescription may not be that high. So as a licensed and certified agent, I am trained to be able to calculate what the projected expenses of their prescriptions are going to be. But Rob, you know how I start that out? I use Medicare.gov, so I have a very reliable source. It's going to calculate the various companies in their certain service area. When we come up with this composite of all their prescriptions they're taking, I go to the end, which are plans that do not have a prescription drug plan on them. It's called an MA, Medicare Advantage, as opposed to MAPD, Medicare Advantage Prescription Drug, which combines the Part D in there. And that's usually done, Rob, at no additional cost to the beneficiary. But so why would a person buy an MA? Again, maybe they have an employer that's covering that. Maybe they served our country and the VA is really providing their prescriptions, so they see no need to have that additional feature on their plan. But when I go back to the MA only, now I've got this calculation of all these prescriptions that aren't being covered, and it's going to give me the retail. I've seen, generally 12 to 15,000 a year. 50. I've seen some that are over $100,000 a year.
Oh my.
So that's what the raw prescription cost is if you didn't have a plan. Okay, so now we go back and we determine which plan or which plans are going to cover that. So what happened for this year, they put a limit, a catastrophic limit of $2,000 per year. Well, Rob, to me, $2,000 is still a lot of money. Okay. Probably to you and most of the people you know. So we know for our seniors who are trying to monitor their budget, they probably have a reduced income. They're on Social Security. And now $2,000, wow, that's too much. As a result of all of this, Big Pharma did what? they increased the cost of their prescriptions because they knew that limit would be $2,000, and the insurance company and the federal government can just make up the difference.
Oh my.
Okay. So therefore, how manufacturers discounts, they're calculated into this. And a lot of times that needs to be an important part of the senior's planning, believe it or not, is to be able to get the manufacturer's discount on an expensive prescription.
I see. Yeah, and then having somebody like you that can calculate
That's
it and
right.
walk you through it a little
That's right.
bit.
And there is no cost.
Yeah.
We are not allowed to charge a fee, for that. And, we'll come up with the closest answer possible. Again, I look at the aggregate cost, and then we're going to look at what the cost is. And usually it consists of the following: an annual deductible. What is a deductible first? Well, that's the customer, in this case, the Medicare beneficiary's responsible portion before coverage begins. So oftentimes tier 1 and 2, which might be more of your maintenance or your generic drugs, lisinopril, metformin, some of these are
Okay.
considered tier 1. They are of very little or no cost when you have a Part D. And usually you don't have to pay a deductible for those. But we start getting into Eliquis. Let's see here. Ozempic has become very common. Weight loss programs. Nurtec is one I've come across, which has gone to a tier 4. So that's for neurological issues. Well, you have to pay a deductible first. That deductible might be between $500 and $600. Okay. And a lot of times a senior, they have to absorb that in January or February, right after Christmas.
Oh, right.
Right when everything has already been depleted. Oh, we got to come up with a drug deductible. And after that, they go to a copay environment. Okay. So a typical copay for a tier 3. So let's say Eliquis is tier 3 with their formulary. A formulary is the list of covered prescriptions with a given insurance company. And now they're going to pay, let's say, $47 a month.
Uh-huh.
Well, if you buy it retail, it's $800 a month. Okay, so we know we're getting a bargain even at $47 a month. But then they also put a cap on that of $2,000 for the covered prescription. So we can see the benefit to our Medicare beneficiaries of having that $2,000 limit, because before that it was like $8,000.
Right.
Okay.
Yeah. So
It had a little different structure. Do you remember a term called the donut hole? The donut hole is also known as the coverage gap. Well, that's when a person reached a point, and they did away with it, fortunately. But it confused people usually about this time of year, roughly 2/3 into the year. Now, how your prescriptions were being covered changed, and you have to absorb a percentage of it in the form of a coinsurance rather than a copay. So now that $47 might have gone to $120. And then you start adding that up. Well, the senior who's just trying to budget, now they have a high electric bill because it's into the summer. So that really wasn't a convenient time to be paying a higher prescription cost. So there was another change, and it's good for a senior who's being challenged with that high monthly or that intermittent high expense,
Uh-huh.
to go on a payment plan with the insurance company, where you're going to pay the same amount. If you know your prescriptions and why it's valuable to work with an agent like myself to be able to calculate what those prescription costs are going to be. Let's say they're $1,200. They're under the $2,000 threshold, but that senior isn't in a position to pay $1,200 all at once.
Right.
Well, how about $100 a month?
Oh, yeah.
Okay. So instead of this sporadic, $600 one month, $47 the next, maybe it's better to have a level $100 a month because it's easier to budget that.
Yeah, kind of like budget billing with your power bill or
That's
something.
right.
Makes
So
it a
now
lot
you can
easier.
do that on a Part D.
I see.
So yes,
Yeah.
and so they would just need to work with whichever insurance company, because it is an insurance company that's part of that Part D. As I mentioned, it could be in the form of combined with Medicare Advantage. That's Part C. Okay, so Part C is in cat. That's the insurance company who's now providing the same benefits as Part A and Part B. So now the person has a Part C, and let's say they've chosen one of the big insurance companies, and they have a large network, and their physicians are covered. They calculated that their prescriptions are covered at a reasonable cost, but now they go to the hospital. What's going to happen? Well, often they have a copay. Depending upon their plan, they're going to have a copay for that hospital visit for some duration, typically 6 or 7 days. Well, that might wind up being a couple $1,000s. Again, that senior wasn't really prepared for that. But what that counts towards that other term I used earlier, MOOP.
Okay.
Because unlike traditional Medicare, the Part C has a maximum out of pocket. Somebody has hundreds of thousands of dollars of medical expenses, their maximum might not be able to exceed somewhere, between often $5,000 and $8,000 are typical. Now, there's different forms of Part C, so I'm going to cover that part real quick. I
Okay.
think that would be important
Yeah.
because this is the greatest area of confusion. Now that we've broken down that A and B is traditional Medicare, most people need to buy a Part D. And a Part D, it's, the cost will vary. They just need to determine what covers their prescriptions. And again, work with an agent on this.
Okay.
So now we're going into the Part C. We want to see what some of the differences are in the Part C and the Medicare traditional A and B. Because if the coverage is supposed to be identical, and I'm using the word supposed to, and you know that things have to be approved, particularly for any kind of an advanced care or maybe a surgery or a procedure,
Mm-hmm.
that
Right.
somebody needs to approve it. Well, Medicare, the federal government, might be more likely to approve that particular procedure or surgery or service than the insurance company.
I see.
Because insurance companies do what? They manage risk. And if they see risk, that's where, managing that risk is part of their profitability model. Generally, an insurance company needs to distribute 80% of their total premiums back out in the form of benefits so that they can retain 20%. Sure, that goes to their stockholders, commissions to agents and what have you, but that's part of how they do business.
Mhm.
So where is the appeal with a Medicare Advantage Part C? One of those is limiting that MOOP, putting a limit on what the high potential medical expenses could be. What about other services? Well, they're going to usually include or at least offer a Part D at no additional cost. They might offer silver sneakers, or I heard about another one today that covers Lifetime Fitness. Wow. Hey, seniors, you can go to Lifetime Fitness with a certain plan, so they are getting pretty creative. So that is quite often appealing for the Part C. So it may depend upon what the person's needs for care would be. Now, Rob, as you know, I lead an organization that consists of a number of different providers, that have great experience. We have hundreds, could be thousands of years experience because, there's one individual and he and I, we go back 33 years in this business.
Oh, wow.
I've been in the business 46 years, but as far as an individual, so, we have, we can joke about, how long we've been doing this, but that provides a lot of value to the people that we serve. As a general rule, the providers, whether it be a specialist, a cardiologist, or somebody providing some kind of specialty care, it could be home care, hospice, they often generally suggest that having traditional Medicare is the better way to have the coverage in order to get that approved. Keep in mind, that is the federal government approving that as opposed to an insurance company who is more than likely going to scrutinize the medical necessity of that kind of a service. Now we're going to get into the different forms of what a Part C, and this falls in line with the under age 65 plans. A lot of us are familiar with HMOs and PPOs, right?
Right.
What is the fundamental difference? It's where the HMO requires a referral to go to the specialist. They also have a limited list of physicians, even though it may be very extensive. We start going outside of that approved list, Rob,
Yeah.
we're not covered with one exception, an emergency. They must treat you in the event of an emergency. You have the HMO, which is somewhat restrictive, relatively low copays, a lower MOOP, but a limited list, often with a lot of value, a lot of extras on the HMO. So
Okay.
that's where, but whenever, yourself as a provider and other providers, oftentimes whenever there is a problem or an issue getting something approved, it's generally in the format of an HMO. So that might serve a certain segment of the population. They're looking for high value at low cost, and they're okay with a limited network. Maybe if they don't travel much outside the service area, an HMO might be more appealing. So now we go with a PPO. Now I'm going to share myself personally. I'm 67, so I qualified 2 years ago. I picked one of the local big name PPOs because I wanted choice of my doctor. I wanted to be able to choose when and if and who I go for a specialist. Interesting, 6 months after I acquired Medicare, I had a cancer diagnosis.
Oh, wow.
I knew exactly, it was skin cancer. I knew exactly the provider. They were in my network. It cost me about $90 to have the procedure for a couple of visits. They took a chunk of my cheek out, and Rob, I'm more handsome now than before I had the surgery. I was scared. I was scared when I got that phone call. I was on an appointment with one of my favorite customers about coverage for her husband. We were looking at a certain type of cancer plan. And again, back to one of the reasons why I'm in the business, I've lost both my parents, one to heart disease at a young age, and then cancer. Mom was 64. Mom, she was gorgeous. I'll just tell you, she was, but to see her lose her battle to cancer at the young age of 64.
Wow.
And so during the COVID shutdown, I did a little bit of re-education, and I found a particular plan that incorporated something in the cancer therapy section that was unique and not covered by Medicare, TRICARE, Blue Cross. The companies do not cover this because it's not really approved by the FTC.
I see.
A local doctor indicated that in Europe it's very commonplace, and it's called genomic sequencing. So let's say, for example, Rob, you and I, we have separate DNA. Okay. Let's say we had the same form of cancer. Well, because of our separate DNA, how they treat you is different from how they treat me, how that cancer is treated. So there's a research institute that focuses upon this. And for the policy holders of that policy, they get that service at no cost. So now back to my personal cancer diagnosis. I'm going through this. Well, I'm filing a claim because I'm paying for that other policy separate from Medicare, and I'd had it for a few years. My trigger was I lost mom at 64. As I was approaching that age, I realized the chances of me getting cancer were great.
Right.
Okay. Now, I'm filing a claim. I'm thinking new car, maybe go on a vacation. Oh, I'm going to get me a big benefit, because it only cost me $90 for a couple of visits at a skin doctor, one of the dermatologists that I picked and I controlled when I went to that doctor. I was not dictated by the insurance company that. Well, I filed my claim. I got $500. They said, you're stage 1. You're the very basic, no new car, no vacation. You know what I did? I went and bought a silver collectible. I said, I'm going to treat myself with something nice. And I have a silver collection. So I bought this silver collectible. By the time it hit the mail, it doubled in value.
Oh, wow.
So, and I have gone for a follow-up. I'm, good shape, but I keep that coverage. So in the event that the cancer does reoccur, and I can proudly say I am among, even as a cancer survivor, I have the greatest chance of survival and recovery from cancer because I have access to an additional service that's generally not available or covered by other plans.
Wow.
So see, now I'm thinking beyond the Medicare A, B, C, and D, right? Okay. So there are other things. I think one of the biggest mistakes that people, whether they're over or under 65, when they count too much on their plan to do everything for them. Now we get into home care services. That's a prime example. This is medical insurance. There are other types of coverages that will enhance the private pay component of home care services. And I think you can appreciate the value of that. Having it on a private pay allows a provider to be independent of Medicare or maybe what another plan is going to do. I often hear about long-term care insurance, and it's something that came out. I remember when it came out, it has changed a lot since then because long-term care insurance is underwritten based upon the rule of morbidity. 2 out of 3 seniors are going to need care, and that number is probably growing.
Hmm.
So as that number grows, the morbidity calculation is also considering that's the chances of needing care, and so that increases. So what happens to that insurance policy that you bought 20 years ago when you were younger and better health and you had a low premium? The coverage may change on that because of the time. So another way to consider it is a life insurance policy. That's one of the areas we're going to cover here in a minute. But life insurance now often has an additional benefit called an accelerated death benefit. What that means is something happened to you, Rob, but you didn't die.
I see.
It might be a heart attack. It might be a stroke. It might be the need for care.
Uh-huh.
Now mom or dad needs to go to memory care, and we have a lot of great places to go to memory care.
Mhm.
But guess what? It's really expensive.
Yes.
The statistics according here are that the average for a private nursing room is $108,000 a year. What if they live several years? They've now wiped out their 401k. They may not have that much coverage.
Mhm.
So, but usually when they have a life insurance policy, it has a benefit that is going to be triggered by the following: a diagnosis of ALS, dementia, or Alzheimer's, or a physician to verify that they are unable to perform 2 of their 6 daily activities. Some other statistics are, as I mentioned, 2 out of 3 seniors are going to need care.
And most people don't think about that aspect. That, I mean, your chances of needing care is greater than not just 50%. I mean, it's greater than 60%. Yeah.
See, that's right. And then now we talk about family heritage. I've already mentioned I'm heart disease on one side through my father, and then cancer on mom's side. So there's that double whammy. So I bought extras.
Sure.
Okay, so I bought some of the extra plans. They are considered supplemental. We're going to get into that definition of what is a supplement, but I am supplementing my Medicare PPO with cancer coverage, heart attack and stroke, and also with a plan that will help pay my co-pays, cover my MOOP if I have a long-term hospital stay. Long-term is actually beyond 1 day, by the way, because it gets expensive very quickly.
Well, I appreciate all that great information and helping us walk through some of that. And I'm sure it's caused more questions than answers with some people.
Well,
and that's
it
why
probably has.
they'll have to reach out to you still.
Well, they can do that. So now we've gone through the parts. What were the parts? A, B, C, D. Okay.
Yeah.
So we're going to talk briefly about plan, because we now hear plan A, plan G, plan F. Yeah, what does that mean?
Right.
That's called a Medicare supplement. Okay. A Medicare supplement is where that insurance company is now contractually obligated to pay what Medicare doesn't pay, with the exception of what's designed in that plan. So I'm going to focus upon plan G as in George.
Okay.
So my few customers that I have on Medicare supplements, they're in plan G. The deductible may change from year to year, but right now it's about $257 a year. So now a person is paying an extra premium, and those premiums, they can get pretty hefty. So they're having to buy a Part D, a Plan G, and then they have Medicare A and B, and they have now, I think about, a customer who had about a $200,000 hospital stay.
Oh, wow. Yeah.
Yeah.
That don't take long, though.
So if they didn't have that supplement, they would have been out $30,000, $40,000, $50,000 or something. And then what about getting those services approved? Because you start going out of pocket like that, the medical provider wants to get paid. And as opposed to having a card where there's a contractual obligation for that provider to get paid by an insurance company, I just think that the services are going to go a lot smoother under that environment. Okay. According to Milliman Research, that's one of your medical research companies. They did a calculation. They assumed that 2 people were age 65 and that they were in just average, relatively good health, few bumps and bruises, just like me, and they were going to live until age 91. Now, if I live till 91, I'll feel very privileged. That would be
absolutely.
I would have outlived everyone else in my family pretty much, except for I had a grandmother who survived that age and an aunt. So, what's the difference? Well, what's the bottom line cost difference? And person A, who had traditional Medicare, they bought a Plan G, they bought a Part D, they went through life, they had to have higher premiums. So at the time where they're more likely going to need the service, the premium is becoming less affordable. So that's something you have to consider in that planning. The difference in that individual and the other individual who chose from the outset a Part C, included their prescription drugs there, is about $140,000 more. So if I'm dealing with a family and they're thinking budget, mom or dad, they're living on Social Security, they don't have a lot of extra money, maybe the house is paid off, and but they were trying to manage the prescription drug costs. Well, probably another $140,000 is not in their bailiwick. And so that's why so many people do tend to gravitate towards a Part C Medicare Advantage plan, is because of the cost savings. Now, do you think I pay $185 for Part B?
Okay.
Of course not. I mentioned there's several ways to get around it. So there are areas of extra help, but that's really designed to defray some of your prescription drug costs. Okay. There's something called a give back. I'll come back to that in a minute. But there's also people who pay a higher amount based upon their prior earnings.
Okay.
So if you have somebody, if their combined income is over a couple of $100,000 a year, they're probably going to pay a lot more for that Part B, and also the Part D has an extra benefit. That's called an IRMA tax. It's based upon their earnings. Here's what a give back is, and it's available usually in the larger counties. We're here in Bexar County, roughly 1.8 million people, 500,000 seniors. I mean, we have a big senior. This is ground zero for Medicare Advantage companies. So they want to go and compete. And they have something called a give back. And we're saying, we're going to change the program up. Carter, we're going to charge you a higher specialist fee, but we're going to give you money on your Social Security back to defray some of the cost of your Part B. Hey, that sounds like a bargain to me, to get like $1,000 a year back, to lower my cost of Part B. The Part B, which is normally $185, I have it down to $99 right now.
Okay.
There are plans that cover more of that. This is particularly appealing to our veteran population. The reason why is, again, they have the VA, so if they happen to have a higher cost of going to a cardiologist, they're going to the cardiologist at the VA. They're not going to the one over here in the medical center, okay, or up here on the north side. So, the fact that it happens to be a higher copay or lower benefits, they're willing to accept that to get that Part B mostly paid for. Usually there's still some costs that they have, but the plans are all different, whether an HMO or a PPO.
Oh, wow. Okay.
Rob, there's another plan out there. This is another area of confusion, but I want to dispel it right now. And I mainly am talking to the providers. Why am I talking to the providers? Because there's another way they can bill in the insurance company. There's what's called a PFFS, so it's really more of your preferred, provider. And then it's where the provider gets to bill the insurance company just like they do Medicare.
Okay.
So instead of billing it like your PPO or your HMO, now you've got this other program out there. Perhaps it is easier to get some of those services approved. I'm thinking of wound care, prosthetics, some other kind of advanced care, not necessarily the home care element, because this is still medical insurance. Okay. So maybe the PFFS is the answer. And here's why. As people progress in life, their health changes. So let's say they started off with a Medicare Advantage plan at 65. Now they're 72. They've had a stroke, a heart attack. There's some additional needs associated with their care that they and their provider and their family feel like would be better served through traditional Medicare. Okay, so they say, so they come to me, the agent, and they say, we want you to change us over to traditional Medicare. Well, I can't exactly do that, but here's what I could do, Rob. I can enroll them in a Part D. When I enroll them in a Part D, let's say effective January 1st of 2026, it's going to take them out of their Medicare Advantage plan. Okay?
Okay.
So they will no longer have whichever insurance company. They have the Part D insurance company, but it put them back into Parts A and B.
I see.
Okay.
Right.
Okay. So now they have traditional Medicare. They have, it's accomplished that. But what are we missing here? they have a very high MOOP. They're still subject to 20% of their care as a general rule.
Mm,
$200,000 hospital bill, which is not that hard to accumulate.
right.
We're talking 30, 40, $50,000.
Yeah, 40,000 of the 8
And
20%.
and so the family might be upset. They can't afford to mom or dad's big medical bill. Why didn't you tell us that this would do this to us? We're going to dial. We got 444 on a speed dial.
Yeah.
So, because that's how, people are now, and that's very legitimate. That's why it's so important to deal with a licensed and a trained agent. We need to be certified, have all the certifications for all the, the Medicare plans that are available, not just traditional Medicare where they're selling, quote, an insurance policy in the form of a Medicare supplement. We mentioned Part G as in George. That is medically underwritten except for when you turn 65 or except for whenever you first qualify for Part B. So, like I think about an individual who she's been my client for quite some time. Uh, so she had coverage before she turned 65 on disability. So if you're on disability, usually for 24 months, and you get Medicare.
Hmm.
But
Right.
under the age of 65, a supplement is not priced accordingly because the assumption from the insurance company is that there is a serious medical problem because you got Medicare before the age of 65. So now they're charging $600 or $700 a month for what that other person who turned 65 might be paying $150 or $175 a month for.
I see.
Okay, because of the difference in the pricing. So,
Right.
however, like that, certain individual I mentioned, and they have the resources to buy a supplement. So that's our first thing. Do you have the resources to cover the additional premium? Well, then she's going to be better served when she turns 65 to go into traditional Medicare. She'll get a guarantee issue for the supplement, even though there's underlying health issues that normally would render her uninsurable. They grant the exception at age 65. So that is a huge part of the planning. It's going to be determining what level of care are we going to need.
Hmm.
Okay. Now, I've mentioned before, Rob, that quite often people expect too much out of their medical plan, whether they're on Medicare or on a company plan or their group coverage, what have you. And that's why it's important to understand, what is that really designed to cover? Medicare Advantage, that's medical insurance. Part D is prescription drug coverage. We start getting into the additional needs of such as home care, assisted living, memory care. There usually needs to be some other source to help pay for that. I mean, $108,000 a year, you might be able to help me with this, but home care, it's not unusual to be $1,000 a week.
Hmm.
Did you know that a person could buy a plan, a person in their early 70s who is diabetic, a heart patient, kidney failure, and cancer can still buy a home care policy? In their early 70s, they're probably looking at a top plan of between $110 and $120 a month. And there's usually only about a 30-day wait of keeping that policy with no waiting period when claims are going to be made. What creates the claim? A diagnosis of a cognitive deficiency, such as ALS, Lou Gehrig's disease,
Hmm.
or dementia or Alzheimer's, or back to the inability to perform all 6 of their daily activities. So now when that Medicare beneficiary, has received this diagnosis or this required level of care, they can file a claim and they can work with a firm just like yours or others, where now they have the resources, they know what they're going to get. You can build a model of care to make sure that Medicare beneficiary is well taken care of. There's some plans that'll even pay the family member. They'll give a temporary assistance to the family member to be able to transition into this, because maybe somebody had to travel from another part of the state or the country, or maybe they had to quit work, or, there's an additional expense. So it would make sense to pay that family member for the care they're going to provide their loved one.
Yeah, I think you were sharing a little bit about that with me before we started the show, wasn't you?
Yes, I did. I
Yeah.
mentioned there was a benefit in this particular plan. We talked about
Yeah.
home care coverage the plan I'm looking at here, it actually is called Recover Cash, so that when they go into assisted living, memory care, so it will cover in the community, the senior community, as well as at home, because we don't know what level of care we're going to need.
Right. Yeah.
And so now, when those resources become available, mostly on a private pay, now we can develop something. Okay, what about mom or dad?
Hmm.
You know, and oftentimes I do appeal to our wonderful hospice agencies as to why these plans are important, because the people they serve do not qualify. They qualify for hospice, but a lot of times they have a spouse, they have a family member. What's worse than having one parent on hospice is having two,
Oh, yeah.
or requiring care in this case.
Hmm.
Okay, so if one parent required care, maybe that other parent was able to give them care until their health deteriorated, and it does take a toll on them.
Right.
So there's definitely a need to have that other spouse covered, even though one may not qualify.
That makes
Okay.
sense. That's actually not that uncommon for two people to end up on hospice together. I've
See,
seen that
you've
multiple
seen that
times.
firsthand. That's
Mhm.
right.
Yes.
That's right. Yeah, you know what? It even gets better. Guess what else there's available for our seniors?
What's that?
Okay. Most seniors I've seen the statistics, it's over 90% take some form of prescription, right?
Right. Okay.
Okay. Some of those prescriptions, as we mentioned earlier in the show, become very, very expensive, but they're usually going to be covered through a Part D with some kind of a limit, but we start getting into your Eliquis, your Ozempics, and those they really are expensive. So you want to
Mm.
make sure you understand how they're covered. But when they have a home care plan, there's an incentive for that covered person to continue taking their prescriptions. They don't want them to not take their maintenance drugs or their, whatever it is the doctors prescribe. So as an incentive, they return part of the premium.
Oh, wow.
I've seen in some cases, half the premium is returned just because they're taking the prescriptions.
Oh, wow.
So now we just did what? We made that home care plan a lot more affordable.
Yeah. Yeah.
Something that somebody thought, there's no way we can afford that. There's no way we can pass. We've got all these medical problems. No, usually as long as you've been out of the hospital for 6 months, and as long as there's not a diagnosis of a cognitive deficiency. Okay, so those are the things that tend to disqualify people.
I see.
Okay.
Yeah, the insurance company actually benefits by keeping you out of the hospital.
That's
don't
right.
They? Yeah.
That's right. So wouldn't that insurance company rather give you a financial benefit, even if it reduces the premiums they're receiving, to lower their potential claims?
Yeah. It makes
Yeah.
sense. Yeah.
A lot of times it's good to have one of these home care plans, even if they have long-term care insurance. Do you know why?
Why is that?
There's often a waiting period before the benefits kick in.
Oh, okay.
They might be in this, this $7,000 or $8,000 a month community, fabulous community, but the
Uh-huh.
first 2 months are on you or on their child or on somebody, and their expenses, their savings have already been heavily depleted just
Mm.
getting them to this point. Now we've got to come up with another 5, 10, maybe $15,000, where perhaps a better way would have been, let's provide mom or dad with a home care setting or something, or I mentioned the recovered cash. So there are ways to be able to recover and to plan ahead. Planning ahead is the key.
Right.
Okay. So I'm trying to reach people. Obviously I ask my network for referrals. I do get those quite frequently. A lot of times though, it could be too late to do some of the planning that we needed to do. Okay. So, action now can really pay off a lot in the future.
Yeah, it's like a lot of things. It's an ounce of prevention's better than a pound of cure, as the old
Right.
saying is, isn't it? Yeah. Addressing it now. Well, thank you so much for all that Medicare information. Well, you've really helped us understand some of those different parts in the alphabet that goes with it there, all the different letters.
Right.
So I guess we just need to see if the government adds an H and an I here later,
Right.
right?
How far down the alphabet we're going to go.
Yeah, how far
and
can
I
we
don't know
go?
if there's going to be a relationship. The Part D just happens to be prescription drugs. Okay. So, but yes, they probably will have to add something else. Dental is often a very important thing. Are you aware that the number one cause of heart disease is from poor dental hygiene?
I actually read an article about that a while back about the correlation between poor dental hygiene and
And
heart
heart
disease.
disease,
Yeah.
yes. I lost a brother at 49 years old to that. Yeah, he just let his, dental, he just didn't, and at some point an infection went to his heart
Oh my
and ended
goodness.
his life. So see, I know firsthand about that. I chose an individual dental plan before I got Medicare. I knew I need a lot of dental work. So plan ahead. Dental insurance is usually pretty affordable, but the big key is having it in place for long enough so that major work is going to be covered.
Okay, well,
Um,
your work goes beyond Medicare, and you
it
go
does.
deeper into some other areas. From what I understand, you help with health insurance, disability coverage, life insurance. Why are these things important for seniors and caregivers?
Okay. Okay. Well, the dental insurance is obviously very important because whether it be heart disease or just having good dental hygiene
So,
is a
dental
part of our
insurance is
health.
under your umbrella as
That's
well.
under my umbrella.
Okay,
Yes, yes. And as far as a lot of things become not available to a senior. Okay, they might expire. You might have a term policy that expires at a certain time or at age 65.
right.
Okay, so oftentimes, in order to have permanent insurance, they need to have something that usually has a higher premium, generally a cash value element. And so as an agent, I just have to review that with the individual to see if that really is what they're looking for and to see if it's something that they can sustain, on into their senior years.
Mm,
If they plan ahead properly, the policy should be able to just pay for itself for the duration of the person's life.
I see.
Now, we made some reference to using life insurance as a way to help provide for their care. In some cases, there may be something called a viatical, where usually death is determined to be imminent within a short period of time,
Right.
and that policy is then sold to a separate group. Or there could be more of just a life settlement, which is taking a look at the person's, situation. Let's say we had an 82-year-old with maybe $300,000 of life insurance. They're paying for the policy, or it's covering itself. They now have Alzheimer's, and they're going to require a lot of care. You and I both know we don't know how long that person's going to live.
Yes,
It's
correct.
not like ALS or something else where you can pretty well determine a short term. And so now the family has made a decision that we're going to forego that big life insurance amount of 300,000 because we need cash today to pay for dad's care.
Right.
Dad might live, according to the statistics, 5, 6, 7 years on into his 80s, but a lot can happen along the way with regard to his health, now having Alzheimer's.
Right.
And so the actuaries are going to do the numbers and they're going to come up with a discounted amount of what that 300,000 is worth because we're assigning that benefit to a different group now who is going to be beneficiary of dad's policy.
I see. Okay.
And so now what we're going to do is we're going to receive cash up front. Let's say $200,000. They're in a situation, 200,000 will go a long way towards dad's care, but just like with a reverse mortgage, we're changing the configuration of that home ownership. We're now going to change the configuration of this life insurance policy so that upon dad's demise, whether it be in a short period of time or long term, this other group is going to receive that benefit. But we got our money up front.
I see.
And it was in the form of cash, so we get to do what? Private pay. We get to choose who our provider is going to be.
I see.
Okay, so that's one of the ideas. Now, something else that has come up really more recently in my career is called a secured note. A local accredited investment fiduciary referred this to me. And gentleman, his name is Greg Drew. He is a fantastic artist now. If you see the Greg Drew artwork, man, this guy has got Western art, but he is top of the food chain in the financial services field. And so he said, Rick, take a look at this. This is something that you might be able to incorporate in your practice. Well, it's turned my practice around, and it's turned around the financial situation of a number of customers. What a secure note is, that's where the customer, they actually become their own bank. They
Okay.
have the same security that a bank does in providing a loan. In this case, the loan is being made to a top-rated real estate investment management company that is involved in, the building, the renovating, the buying off the courthouse steps, leasing, all these elements of residential care, of residential home ownership, actually.
Okay.
So they use high quality. They're all out of state. They're not in the state of Texas, at least not at this time. But these are houses that could be liquidated. They're fully covered, and they happen to be in the north. So in the event of a winter storm destroys the house, there's insurance on that. So back to the lender, we refer to them as a lender, not investor.
Okay.
They're essentially their own private bank. They're earning 8%. It's being distributed on a monthly basis, so 8 divided by 12, whatever that benefit is.
Yeah.
$150,000 gives them $1,000 a month. There is virtually no risk to the principal because the fact that it's going to be fully guaranteed, by the title of the home. So now these customers, they're in the position of what the bank would be.
I see.
Okay, so that in the event of default, maybe they don't want the house, but the house can be liquidated. All they want is their money back. There has never been a default that I'm aware of. Usually the duration is for 5 years. 5 years is a foreseeable period. And about 97% of the people do renew their notes because they know, number one, they really can't get that level of income with anything else where there's really no risk to the principal.
Right.
I have a gentleman, he's become a great friend. He lives out in West Texas, and he worked really hard in the oil and gas field, saved up quite a bit. But unfortunately, there were some health issues associated with that occupation. And so as his, health has progressed, needing, additional services and more care, so have the needs for income. We just pulled a bunch of money out of BlackRock, so I'm now known as the BlackRock Slayer. My friends, they had a little party for me, and I got a little statue that says the BlackRock Slayer. And I say that because it took a few months. BlackRock did not want to give up that money.
Okay.
Even though he had made money in it over the years,
Sure.
but he could not tolerate the level of volatility, and he needed the income.
Sure.
Now with his third secured note and his Social Security, he's at $100,000 a year. This is just a good old country boy.
Oh, wow.
So now when he needs services for his care, can you see how that planning worked?
Absolutely.
So instead of relying upon his Medicare plan or something else that really wasn't designed to cover that level of care, he now has the income to provide for that.
Yeah, and do private pay things.
That's right. We're back to the private pay. So I really want to encourage people to consider a secured note. You do not have to be an accredited investor for this. They do have some fairly low minimums, but it's very important. And myself as the authorized representative, I have to go over the certain aspects of the secured note. And I'll just tell you right now, Rob, it's not for everybody. It's too boring for somebody who's, our Bitcoin friends or people like that. We actually, I have a couple of consultants out here who identify people. We have a guy who made over $1 million in Bitcoin, and I'm kind of like, take some of that off the table and go with a secured note.
Yeah.
But you can see the big contrast there in the style of investing. So the secured note is clearly, it's for the, retired educator who can take a partial lump sum from their TRS. Or maybe the retired engineer or business owner or physician, but they don't necessarily, it could just be just regular mom and pop. And they happen to have some money sitting in their IRA or in savings, and now they want to turn that into income.
I see.
Another great strategy that can develop out of that, because we've already identified the need for care, 2 or 3 out of 3 are going to need care.
Right.
Let's say we had a retired couple, and they worked hard all their life, and they paid off their house, they raised their kids, the cars are paid for, they have a good value system, but they just don't have a lot of savings. Maybe they have $50,000 in their IRA, and they say, well, $50,000 in income is not going to do much for us. That the income from that $50,000 IRA can pay for the home care insurance policy on the couple.
Oh, wow.
So that if either one of them, can you see how we turned an asset into providing a solution of the inevitable?
Yeah. Okay. Wow. So you have to think outside the box sometimes and get creative and for people's unique situations and create custom solutions. So the guy that
That's right.
calls you on the phone that solicits you, if doesn't know who you are and doesn't take time to get to know you, he probably don't have the answers,
He's
does he?
probably not going to have the answers. And remember what I said to say. Did I give you permission
Yeah.
to go? Did I say that to you when you called me?
Yeah.
Right? Did I say, did I give you permission to call me? Well, you have permission, obviously. So, no,
Yeah.
you've done a great job, and I appreciate what you're doing. I definitely appreciate how you are serving our community in the form of senior care, serving our veterans. What that means to the families, you have no idea. Well, you probably do have an idea because sometimes they will share that with you. But it
Sure.
really, it really, coming from the heart, a servant's heart, that is so essential. I do have a family member who recently was put on hospice, so I can share firsthand some of the challenges associated with that. In this case, there were some multiple illnesses associated with that family member, but there was clearly a need for the additional services a hospice could provide. It was a challenge. We had to consider certain things. Her personal physician actually had to be involved.
Yeah, and that's of course in home health and hospice, and good companies, they're in it because they care about the people, just like you care about the
Right.
people. You want to help people, and that's what drives me when I get up in the mornings. I want to help people. I want
Right.
people to have the best life they possibly can, whatever their situation is, and however long that may be, whether it be 1 month or 100 years you got. So that's
Right.
that's what
Right.
drives us. Well, thank you so much, Rick, for all this information that you've shared with us today. And I know that you've met a lot of people, you know a lot of people. And without sharing any private details, can you tell us a story about a time when one of your solutions really impacted somebody's life, or maybe somebody that you saw their life and you knew you could have helped them, but they didn't choose, and maybe regretted it later?
Right. Yes. Well, yes, you're right. I have seen that during my extensive career. I look back to, when I was handling life insurance for an attorney, a local attorney, and he was just doing the regular planning that you or I or anybody would have. I think he was turning 60. I was able to get him preferred rates. Okay, so what a preferred rate looked like, he was getting a low cost term insurance plan, that fixed a premium for 20 years.
Right.
Okay, and then he was able to acquire a permanent form of insurance. At that point, it was called variable universal life, which is a combination of investments with a universal life cash accumulating policy. So by having that combination, here's what it did for this family. Okay, it kept it affordable while he was working. Now, he did ask a question while we were getting the insurance issued. Rick, why do I need all this insurance? And I just flat out said to him, well, your spouse has been a private school educator her entire career, and she lacked the benefits of the public school system or her ability to earn income, and she has been very dependent upon your earnings as an attorney. Well, that made sense. About 8 years later, I got a call that he had become ill. He was diagnosed with ALS.
Oh my.
Okay, so here's what that did for this family. Okay, keep in mind they already had the insurance. It was at a preferred rate. He had had time to accumulate cash in the variable universal life plan, and the term insurance policy still had about 12 years left on it at an affordable preferred rate. So they kept paying that premium. They were in a position. Now, ALS is a very, very expensive disease. Not only the equipment you have to get, but what about the care? And so they had moved out of town closer to their family to help with that care. I went to go visit him a number of times, and he was cognizant, but you're virtually paralyzed. So
Right.
the brain works, but not the body. But he was able to communicate that he wanted his wife taken care of. And of course, I'm giving him the assurance, you planned ahead. You bought the insurance when you were in good health, and it's still there. And now, in fact, one of those policies, you can just stop paying the premium and the coverage is still there because you planned ahead and you accumulated enough cash to be able to do that. And he lived right around, it's like 20 months, right around the time that the doctor had estimated he would live. But I saw what a difference. Now his spouse was no longer dependent upon their children, that she had the financial resources to go on with her life because, he lost his battle at age 68, still a relatively young age.
Wow.
So I can see how powerful life insurance can be at an unexpected time.
Wow. Yeah, that's a great story and a great example for all of us to follow in making sure we're planning ahead, thinking about the future. And life insurance isn't just for you, it's for those you love, isn't it?
It really is. It really is. And so a lot of times people say, what type of insurance should I own? What type of life insurance? The answer is it's the type that pays at the time it's needed.
Yeah, that's a good answer. And so I know all your products, for the most part, focus on senior solutions and helping seniors in that area. As we've touched on life insurance here at this moment, is that something that you can help people of all ages with, I assume?
Yes, I can. I absolutely can. I have a lot of experience with that, the training, the financial designations, as well as the access, because see, I'm an independent broker. So I'm not tied to any one company, Rob. And because of that, I can offer a variety of solutions that we've discussed throughout the program. But life insurance is one of those areas that we like to do what? We like to compare.
Yeah.
Let's see
yeah.
how good this one is versus that. And so that's part of the process, is matching it up. Oftentimes it's a person's health that is the determining factor. So in other words, one insurance company may be more tolerant of type 2 diabetes, where another might be, for people on high blood pressure.
I see. Yeah. And so if they got questions like that, they live in the state of Texas, they ought to call you and you can help them out, right?
That's right. Thank you, Rob. Yes. I am licensed throughout the state of Texas. I have, invested a considerable amount in my network on, social media, like so many others. I also have an A+ by the Better Business Bureau. I feel like that's important. We are in an environment where we want to make sure that the customers as well as the representatives are well protected throughout this process. And I feel like that's, the best way for me to do so. That, and also, as I mentioned, getting involved in the community, whether it be some of our networking groups or fundraising. We have San Antonio is booming in the senior care industry. So,
Wow, it really is. It's Military City, USA, of course, and there's all kinds of military people here, but there's also a huge portion of military retirees and people that just got tired of living in cold areas of the country and moved down here, I know, too.
Right. Now they might have a little too much of the heat, but
Yeah, it can get warm.
Right.
Well, thank you so much for being on here today. And I know that your A+ rating with the Better Business Bureau, you have over 500 local recommendations, and those things don't happen by accident. And those are things that really set you apart in this field. So if somebody wanted to contact you, if they had questions, what would be a way to reach you, or where would you point them?
Okay. First off, I'd say Google Rick Carter San Antonio. Because when you Google Rick Carter San Antonio, my alignable profile has a high algorithm and it shows at the top of the search.
Okay.
Okay. Also, they could call me at 210-367-7909. That's 210-367-7909. Or contact me by email at rick@rickcarterinsurance.com.
Thank you so much, Rick. It's been a pleasure to have you on and to be able to just learn more about some of the insurance processes and to get to know you a little bit better as well, someone who's also an advocate for helping seniors. And I appreciate hearing your heart today, too.
Great. Thank you very much, Rob. I appreciate, being on the show. Thank you.
Well, thank you for listening. Thank you for those of you that tuned in today to We Help You Home. If today's episode helped you, please share it with a friend. Hit the like and subscribe button, and be sure to pass this around to people that you know that might be able to benefit from Rick and the services he offers, or just this basic information if you live outside of Texas. Thank you again for tuning in today. And remember, we're here to help you home.